Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday the 20th of September 2018 and we're providing a brief but we hope useful guide to the COT or COT report. What does it mean? How does it work? And is it at all useful? As this subject can become rather technical and potentially laborious, we have split this training into two parts. Part 1, which is this video, basically provides the definitions, what the report looks like, and an overall guide to what the various parts and aspects of it means. Part 2, which will be published Saturday, will be how one can interpret the report, use it to make better and potentially more accurate decisions, and some of the factors to both avoid and to take advantage of. A more detailed and thorough analysis of the COT report will be published within the Inner Sanctum when it is launched on the 1st of November. However, we are confident that for most people what you learn here will be ample, unless of course you are a day trader or wish to specialize in the futures market. Okay, COT, what does it stand for? COT stands for Commitment of Traders Reports and is published by the Commodity Futures Trading Commission or CFTC, which enumerates the holdings of participants in various futures markets in the United States. Specifically, the COT reports provide a breakdown of each Tuesday's open interest for futures and options on futures markets. The data is gathered at the close of business on a Tuesday and is published on Friday afternoon at 3:30 Eastern Time. There are 4 main reports, 1 legacy, 2 supplemental, 3 disaggregated and 4 traders in financial futures. We shall be looking at the disaggregated reports, which are broken down by agriculture, petroleum and products, natural gas and products, electricity and metals, and other physical contracts. Naturally, we are more interested here in the metals, and especially gold and silver. The reports are published in futures-only formats, as well as futures and options combined formats. The data are available in both short format and long format. We shall be looking at futures-only and short format for this training presentation. This report, that is the disaggregated COT, was first published on the 4th of September 2009 and increases transparency by separating traders into the following 4 categories. 1. Producer, merchant, processor, user. 2. Swap dealers. 3. Managed money. 4. Other reportables. So let's discuss briefly what each of these refer to. There are specific definitions for each of these, but we shall summarize them in order not to complicate matters. 1. Producer, merchant, processor, user. Predominantly an entity that engages in the production, processing, packing or handling of a physical commodity and uses the futures markets to manage hedge risks associated with those activities. So a precious metal or silver miner would fall into this category. What's important to note here is that generally these people or organizations use these markets primarily as a hedge. 2. Swap dealer. An entity which primarily deals in swaps for a commodity and uses the futures market to manage or hedge risk associated with those swap transactions. The swap dealer's counterparties could involve hedge funds or speculative traders or even commercial clients who are managing risk associated with their dealings with a physical commodity. 3. Money manager. For the purpose of this report, this is a registered commodity trading advisor, CTA, or a registered pool operator, CPO, or an unregistered fund identified by the CFTC. These traders are engaged in managing and conducting organized futures tradings on behalf of clients. Please note, on behalf of clients. And 4. Other reportables. All other reportable traders who do not fall into any of the three categories mentioned is placed in this category of other reportables. And generally these tend to be the individual trader or small trading entities, though not necessarily. On the short form report, which we shall show later, the categories are divided into three subsets. Essentially, commercials, which as far as gold and silver is concerned are the banks and mining companies who understand the true supply and demand of the asset and are trying to hedge against future price movements. Non-commercials, who are large speculators, often known as the smart money, who speculate on the future movement of the trend in the underlying asset. They are simply looking to profit from their trade, for example, hedge funds, traders and speculators. And non-reportables, basically private investors, small in nature and which represent around 10% or less of the trades and are often known as dumb money, as around 80% of their trades loses. So before we go on to look at a specific report, we need to define what is meant by futures and open interest. A futures contract is a derivative which gets its value from an underlying asset. They are traded to either profit from future values of the asset or to hedge a position in the asset against a drop in price. Open interest differs from volume in that volume is the number of contracts actually traded per day, while open interest is the number of contracts entered into, either long or short, that have not been offset by transactions or exercised. They are new or open contracts which may offer clues as to what the traders are anticipating the price to do in the asset. In other words, the contract is still open. Now briefly, we shall show you a report highlighting these different categories. And on Saturday, we shall bring up the latest COT report, which will be published tomorrow, and run through it with you to highlight some tips and hopefully identify some trends. As you can see, this report is as of the 11th of September 2018, and we're looking specifically at this moment at silver. And you can see the three main headings: non-commercial, who are the large speculators; commercial, which are essentially the manufacturers or producers; and the non-reportable positions, who tend to be the individual investors. And as you can see, we have long and short under each heading. Just for interest, in silver, the contracts are of 5,000 troy ounces per contract, and that's the commitment. And you will see under non-commercial, there are 81,000 long and 108,000 short. Under the commercial, 78,000 long and 65,000 short. And under the non-reportable positions, 31,000 long and 16,000 short. So you can immediately see, and the open interest total is 208,000. Now interestingly, just to highlight for you, each of these means something in terms of comparison with previous weeks, because the important thing is to identify trends, and we shall discuss this on Saturday. It's the trend that's more important than the actual figures of that day. We will discuss what these figures mean. As you can see, they're minus, and whether what sort of impact or bearing they have. And if we look just very, very quickly down here at gold, you can immediately see non-commercial long contracts for gold, 198,000, shorts 205. And you can see the commercial contracts, 169,000 long, and a similar figure for shorts. And the non-reportable, 47,000 long and 40,000 short, and open interest 469,000. Saturday is the day. Please watch out for that video, which we're sure you will not only find interesting and useful, but may very well use this report in future when considering making purchases or sales of your precious metal activity. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on Twitter. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.